Welcome, people. Welcome back. Heat Speakers housing market update for the week of July 21st. This month, bro, is going so fast.
Shit, the year.
The year
Is going fast.
out of control. Oh, before we go on into the market update, just want to show everyone. Look, we got some new merch in. Nice. I'm surprised you're not wearing your shirt,
what, man?
bro.
I just got it right now. So,
and yeah, everyone who's been on the show, please reach out to us, and we'll be reaching out too. But reach out to us because we owe you a shirt. Anyone that's been on as a guest will receive a free Heat Speaker shirt. So if anyone else out there just interested in this shirt, think it's pretty cool, hit us up. We'll more than likely have no problem sending it to you and going from there. So
yeah,
just let us know if you like it. Yeah. So
yes. Welcome in. Let's get this update out there for the people, for the realtors, for the lenders, for the home shoppers, for the investors, for everybody. Yeah. This market is one that moves quickly. So these updates need to happen just as quick.
Yes. We got to keep people informed.
On that agent side, what are you seeing out there, man, with these numbers, with recent reportings, shoppers, sellers? What are we looking at, Rich?
Yeah, the market is still doing the market, guys. It's still an inventory issue we're having. It's just not a lot of resales out there available, and a lot of that is due to the rates are high. You got the would-be move-up buyer, the person who would sell their first home and buy a bigger home. They're not really making any moves right now based on their low interest rate. They're probably holding off. Then you got also on the other side of the coin, you got the empty nesters per se, right? The older generation who have had kids, their kids moved out. Now you got mom and dad home, maybe in their late 50s, 60s, 70s plus, with a big house, no need for it. Typically, in a regular real estate normal market, they would sell and downsize, right? They would buy a smaller home. But now, most of them are finding that even selling their house now and moving to a much smaller home, they're still going to pay a lot more than they would pay for that bigger house. So it really, there's no incentive. It just doesn't make financial sense for them. So that's just what we're dealing with. And again, guys, that's just why the prices are staying elevated and up. So which brings me to, I'm going to give you the national number really quick, and then I'm going to jump into the local data, the Fresno Clovis market. I'm sure that's what you guys are mostly interested in anyway, because that applies to us, right? All right, so let's start with nationally. As of today, the average median home value across the nation, $450,000. So
is that up or down?
Right now we're like about maybe 1.5% up than last year. So very close, but overall nationally looking good, looking strong and up. So again, like I said, last fall, it was looking really bad for this year. A lot of people were projecting it was going to be a crash and prices were going to go down. It was going to be a bunch of houses on the market because the rates are high and no one's going to buy. And that we found out that it's completely false.
All the forbearance, everybody went into forbearance with COVID and they were going to lose their homes.
Oh, man.
Everything was...
and that's not happening anytime soon, guys. So there's no wave of foreclosures. Foreclosures are up. You're going to see articles in the news that's saying that, foreclosures up 100% or whatever that crazy number is.
They've doubled.
Really? Yeah, it doubled.
From 1 to 2.
Exactly. That's right. You got to be careful, guys, when headlines, because they do a lot to terrify without really understanding. You're going to freak out.
Technically not wrong.
Right. Technically not wrong. Technically not wrong.
Shit,
it's like you're going from 50 to 100, which is still nothing, So we're really, there's still a lot less foreclosures than there was pre 2019 and before. So we're still not much foreclosings happening. Even if that is the case, guys, understand that the foreclosure process, I believe I heard a statistic last week. The average foreclosure process to complete, like fully complete, and where the person loses the home, I believe it was about 4 years.
Wow.
Yes. And I know personally, and I'm sure you guys out there know some people that were in foreclosure for years and never made payments, but the bank never came and got the home. They just stayed there without paying a mortgage for years. I know guys personally.
Wow.
One guy I knew, he was like 3.5 years. He was like, I haven't made a payment, and hey, I'll just wait till they do something. So again, my point is, even if it does get bad out there with employment wise, people are projecting recession, unemployment rate goes up, right? So even if that's the worst case scenario, and say they do start foreclosing, we're still like 3-4 years out before we even see that inventory.
Yeah.
So it's not like, they're going to give you, they're going to foreclose today, tomorrow they're taking your house is for sale. No, it doesn't work like that. It's still a long process. And in that process, there's still a lot of time for people to refinance or to work or work it out with their bank, lender, work something out, maybe work out a forbearance is what I really was meant, something like that. So that's that. So anyway, let me get back to the update real quick. I'm just rambling. Fresno, California, median home value, guys, $450 median list price. Sorry. So same exactly as the nation. Nationals $450. Fresno, we're right on there, not $450. So let's compare Fresno's median home price to last year. This year, right now, it's $450. Last year at this time, let's go to July 20th or 21st of 22. We were at $426 was the average list price. So there you go. That tells you guys we are up year on year. We are well over last year's list price. So
which is insane,
crazy. No one would have thought.
Insane, right? The cost to borrow money to buy these homes up.
Right.
The amount of homes available down.
Right.
That should tell you that affordability is really not that big of a deal. It's more of a preference, I think, for the first time home buyers right now. They just prefer not to pay that payment. But the ones that are taking advantage of it, getting into these homes with little to no competition at certain price points,
right?
They're going to refi and be the real winners in a couple.
Do you remember what the rates were last year at this time? I'm trying to compare.
That was the first time.
This is around was it 6?
This is when it started moving towards 7.
So,
is about this time last year.
But I think last year around July it was around 6, and then it went up to maybe 6.
It went very quickly.
I don't think we hit 7 until last August or something.
But August is a week away. So
yeah.
It's this time. Yeah,
very true. Yeah.
This was the time where we started hitting that complete halt, and everyone was like, "Oh my God, the collapse is coming." But that was the first time we hit 7s. We hit it again in February, March. Then they came down a little bit, and then we hit it again, about a month ago, and then they came down a little bit with CPI data. So.
I think it's more the conditioning of, and I get it, it was the programming, right? So it was last year, it was a big halt, and it just, the market froze when it went up, just because it's never been in that short period of time, rates just increased that quickly in that shorter time. So that's really what shocked the market, and it was the uncertainty factor and more of a, wow, this is crazy. So people didn't know, people froze, everyone froze. Now, this year we're still, floating around the 7, but people are still buying and more demand. We are now like, okay, well, I think people are just understanding this is kind of how it is. It's going to be, and I think as we continue forward, things will get better for the simple fact that, the Fed's going to stop raising their, Fed rate at some point, and stabilize, right? Once things become stable, then people will have more confidence. They'll say, okay, this is where it's at. This is where it's going to be for a while. It is what it is. Why not start, let's jump into the market. So I think that's what's going to happen. But really quick, let me, so back real quick, last thing on Fresno, then I'll let you get into the lending side. Here we go. Median days on market. The median days on market here in Fresno, 21 days.
Still quick.
Less than a month, bro.
Yeah, still quick.
Less than a month. That's insane. So the average days on market. So there is a difference between average and median. Median is the middle number, basically, between the high and the low. This is pretty much what it looks like. Average is based on just the overall market as a whole, and just taking that average, dividing it by a number, and you get what you get. It's not, I think median they like to use a little bit better. It's a little bit more telling of what's happening. Average days are 54 days on the market, but there are some that have been on the market for an extremely long time,
right? And skewing that average.
Yeah, and a lot of times it's typically, and we all know, it's the luxury market, the higher end market, guys, of every market, no matter where you are. That's where the majority of the pain is. That's where it's slow. That's where days on market are a lot longer. Houses are moving much slower, and whatever. And it's a different price for each market of what's considered luxury, right? So that's just what that. But yeah, really quick, just back on our luxury, anything with a median of 923, looking like about 35 days on the market. So, I mean, it's still over a month, but it's not as, it still moves a little bit, but just a lot slower than.
Oh yeah.
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 Man.
I mean, and I can't imagine too the negotiation that goes on in those type of deals, man. When you have that much home value, that much negotiation power on the buyer side. Man, I'm sure they got some fun structured loans there.
Oh
man.
yeah. I mean, it's it's just seeing who's really you can really find out who's really motivated in those higher prices. Just you can definitely try to get a good deal. That's where if there's a deal to be gotten, it'll be in the higher higher price range. That's where it will be at. Let's see. I'm trying to pull up. I guess you can. I'm having some issues for some reason pulling up Clovis. It's kind of going kind of wonky, but I'll pull it up shortly, guys. Did you want to jump into the lending real quick? What rate?
Yeah.
Where rates at right now?
Yeah. So last week we saw a huge dip. Friday was at 7.14. Yeah, 7.14.
Okay. Yeah.
We saw a huge dip in the rates that week. The inflation numbers came out. CPI. I don't know if you guys remember the Consumer Price Index. Explained a little bit about what that was. So if you don't quite recall, we did talk about it in the last one. So go check that video out. But that did bring down the rates. Did bring down the rates a little bit.
Good.
And we rode that. We rode that into Friday. And last Friday's update was, hey, it's looking better.
Right.
The overall average was under 7, but most people are still getting rates between 6.875 and 7.25 on conventional loans. This week, without too many economic data points coming out that would skew the mortgage rates, we got an expected yo-yo. Oh shoot, that's about to fall.
Yeah, that was not good. Sorry about that.
It's on top of your laptop. That's why.
Gotcha, I see it. Yeah. All right.
We got the expected yo-yo up on Monday, down on Tuesday, up on Wednesday, down on Thursday. So we've stayed relatively flat. So we're still sitting conventional loans, 6.875 to 7.25. So they're with an average, right in the middle there, 7% is where we're hanging around. For conventional FHA, 6.5 to 6.875.
Okay.
VA USDA is going to be around the same.
Gotcha.
Investment property purchases, just add 1% on is a good way to look at it when you're looking at conventional. So if you're looking at investment property, second home, DSCR loans, some of these non-QM loans that
briefly touch on DSCR for those that are not aware.
Yeah. So DSCR loans are, what they're more considered are investor loans. And really what DSCR means is it's a debt service coverage ratio. So what they're looking at is the rental rate that'll come in compared to what the actual debt service or mortgage payment would be.
Gotcha.
So they're evaluating the asset more than they are the person buying it. That's why a lot of investors like these loans. They don't dig into their financials. So a lot of the investors may be self-employed or running a corporation, and they take a lot of losses on their taxes. So per their documentation, they're not making much per year
on paper.
But their bank statements, their company gross numbers show the complete opposite. So they're doing what they can. They're utilizing the tax code to take advantage and decrease their tax liability. That in turn hurts them buying a home the traditional way. So when we look at DSCR, we evaluate the property rather than the person, and that's how these investors still continue to pick things up.
Nice.
So,
and now, could that be owner-occupied purchase?
No, those are investor purchases only. Because as an owner-occupied, that would eliminate that rental that's coming in to cover the debt service. Now, that doesn't mean that there are not programs like that.
That's what I was going to get into, because there's some business owners that are looking to buy, but they're just like, hey, on paper I just show this, but I really have money in my account. So
right, and I've had those calls before, like, hey, I know this guy, he bought this home for this, and he works with me or does something similar. How was he able to buy? Well, one, he's an investor, so it's a completely different product. However, for you're self-employed, so you're 1099 or you're a sole proprietorship. You're filing an S corp, whatever it is. You're not a W-2 like traditional buyers are.
Right.
And when we're doing that, and you're buying a home that you want to live in, we got to look at routes like no ratio loans or bank statement loans. These type of loans allow for a lot of the general requirements to not need to be fulfilled. So when we look at bank statement loans, we're not looking for pay stubs. We're not looking at your tax returns. Your income is going to be calculated based on the deposits and the business expenses that are coming out month over month out of your bank statements. So if you traditionally have a large amount coming in cash, checks, Cash App, Apple Pay, Square, Venmo, all of it, however you're doing it. You could be a barber. You could be a barber bringing in 10 grand a month. You know, and I don't know if that's high or low for a barber, but
hey,
I mean,
over
if you're working
it's not bad for a barber.
if you're working 7 days, if you're working 7 days a week, I mean, I get my haircut every week, and that's $50 a week. So,
wow.
I mean, if you stack your days and you're working 7 days a week, it's very, very possible. You know, so are you reporting that on your taxes? Probably not.
Right.
But your bank statements are going to show all of these deposits coming in. So, bank statement loans are the ones that they use for owner occupied. DSCR are the ones that investors use for buying rentals.
Quick question: in that scenario, right? This is just because I'm sure someone's thinking of this. If they're a business owner, they have, they're not reporting. Say they're not paying taxes, and they're going to apply for a house. Just in the scenario, right? Is there any chance of something getting stopped during the process, where the federal is like, IRS is like, hey, this guy didn't pay taxes. We need that before he can buy this house, or could they get stopped, prevented?
I mean, audits are audits. They're going to happen
during the process, potentially.
Not during the process. No.
That's what I mean. So if they were to apply for a loan, they get it, whatever, and they buy the house, you think that will come up? Or if they never pay taxes, could that be an issue?
No, not while buying it. No, I've never seen that happen. Now, buying a home and claiming you only made $15,000 for the year might trigger the IRS to look into your tax filings. But at that point, they can't go and take the home away from you.
Gotcha.
You
But
already have your mortgage set.
They wouldn't prevent it. They wouldn't say, "Oh
No.
no, this can't go through. We need this money."
No, because we're not even looking at tax returns. So honestly, we have no idea what they're filing. We have no idea what they're claiming. We have no idea what they're writing off. We're looking at their bank statements to determine what their income is coming in. And then when we see, let's just going back to that barber example. If we see, Sally's Beauty Shop, $300 withdrawal, charge every other week, we know that those are more than likely business expenses because you're buying whatever you need for your salon or your barbershop. Whatever, paying contractors, mirrors, razor blades, whatever it is you're doing, we're going to see those on there, and those are going to be calculated as expenses, and we're going to deduct those from all of the deposits that are coming in. So if after deductions you're showing $6,000-7,000 a month, we multiply that by 12 if that's what's happening month after month.
Gotcha.
And that's what we use for your monthly income. So
good to know, guys. All you business owners out there, please reach out to us, man. There's a lot of ways you guys can buy property. You may not even be aware.
And it's amazing how many people don't know this or don't know this even about their own family and friends. I mean, there's a lot of cultures that are huge on trucking companies, a lot of cultures that are huge on restaurant companies, a lot of cultures that are huge on landscaping companies.
Yes.
I've helped them all, and they bring their taxes, and I'm like, hey, you're showing that you lost $3,000 last year. I know you didn't, but you're showing it. We're not going to be able to do this. However, if we go bank statement loan, it's going to require a bigger down payment, but we don't have to look at your tax returns. We're going to take what you actually have coming in month after month and use that as your qualifiable income. So
nice. There's
a lot of ways.
A lot of ways to buy a home. Just got to reach out, call us, let us.
As long as you understand that the traditional guidelines for buying a home are being altered, right? So the traditional guidelines are in place so that the bank assesses your risk and determines that, okay, because we've pulled all of this documentation, it's a less risky loan. We'll allow them to put 5% down. We'll allow them to have a 580 credit score. So all of this documentation goes in there to avert their risk from you defaulting on this loan. Nice. The further and further, the wider and wider we make these requirements and eligibility requirements bigger for more people to qualify for, the more and more risky that loan becomes. The banks know this, so they offer higher interest rates. They require bigger down payments because it's a riskier loan. They're going to require things to change. So just know, if the further and further we get away from traditional guidelines, the more and more you're going to be asked to do. So just as long as people know that, it's not ideal, but it's better than no.
Right.
The answer is no. If you're not down with this route as a home buyer who's, or as a homeowner, business owner who's writing off all of your expenses, the answer is no. Or it's we got to go this route. So the alternative is no. Or make it work this way.
Or make it work, yeah.
Or pay your taxes. And nobody said, well, that's not an option. That's not. Never mind. Okay, let's go to the bank statement.
Let's go to the bank statement. Yeah, exactly.
So I mean, it's not illegal. They're utilizing the tax code. They're writing off everything they can. There's nothing illegal about it.
Right. Yeah. So
it's just a loan product.
It's a lot out there, guys. Just gotta.
And you're not gonna get that at a bank.
No.
You're not going to Bank of America. Oh yeah, DSCR. You're not going to the credit union. Oh, we got you bank statement.
Yeah.
Hell no.
And
It
I
ain't
tell
happening.
I tell all my clients, all
Brokers.
buyers that I say, hey, just at least you could still definitely reach out to your bank, especially if you bank with them. You got a good relationship. It doesn't hurt to see what they can offer
Right.
you, but you also definitely want to seek out a mortgage broker who's going to have more options and possibly can get you a better rate as well. So just they're going to open up more doors for you guys. So
Right.
such as Mark is mortgage broker.
Right.
Okay. Well, let me get the numbers on Clovis because I know there's people out there waiting for Clovis numbers. So Clovis guys, everyone in Clovis, median list price as of Friday, July 21st.
42. What is it?
Oh, we're guessing now. Okay.
Yeah.
What is that?
What is it? 482?
No.
Oh.
Median list price in Clovis. Remember, they got some big high end properties.
Shit. Okay.
$599.
Oh my gosh.
Yeah, much higher than I thought.
450 was-
$599
Okay.
median list price in Clovis, California. That's no joke, guys. See how it just goes up so much from Fresno. You know, we're at 450. It goes up to 5. Wow.
Honestly, I can't justify it. I can't. I live down the street. I'm sorry. Go ahead. Finish the
I mean, Clovis is a beautiful city, guys. Very, suburb just east of Fresno.
$130,000 more. Beautiful city. I don't know.
It is.
To each their own. To each
So
their own.
last year, guys, at this time, July 22nd of last year, 22, the median list price was $574.9. So they're up.
Yeah.
They're definitely up year on year as well. So look, we're looking good in this area, Fresno, Clovis market. I think overall Fresno County we're looking good. Year on year numbers are strong. We have a lot of good buyer demand. The issue, guys, of course, everyone knows is we just have a very low inventory, especially around the median and lower. It's just not much there. There are options out there, guys. I think new builds are looking really good, but there's definitely inventory out there. You just gotta do your homework. So reach out to a real estate agent, reach out to me, whoever. We can tell you all about another option as far as purchasing a home, since there's not much out there right now. But so back to Clovis really quick. Median days on market, 28 days, so less than a month. The move is still moving quick. Let's see here. So yeah, median rent in Clovis, $2,400. $2,400 is the median rent in Clovis. So. Yep, that's what that looks like. So again, we're looking good here. Market's still moving. It's just we're doing less transactions this year. That's why it feels like it's crawling a little bit at some points, but buyers are still there. Still a good demand.
Definitely.
Yep. Yes, sir. Anything else on this to the market update, guy? Today you got?
No. I think that's good. We're really gonna keep an eye on next week is that Fed meeting.
Yeah. What they meet? I believe Tuesday.
Yeah, Tuesday.
We're gonna know if what.
We're gonna know what the Fed's plan on doing
If they're gonna increase.
Yeah, with the rate hikes. Right.
What do you feel?
I mean, everything points to them doing a rate increase. I mean, inflation dropped, but I mean, you look at these numbers. Transactions are still going on at the same speed. The home appreciation is still continuing to go up. Buyers are still buying whatever they can. Whatever.
The market is still.
The market is
still
still
going kind of pretty crazy. It's going well. It's like.
And I really hope that they don't get into the mindset that they need to stop it, halt it, or devalue the housing market. I really hope that that's not like the goal of the Feds. But, I mean, because inflation is at a normal rate right now. And I would like for them to leave it alone, but I don't think that they will.
I know their original goal was like getting like a 2% or lower, under 2% inflation. Headline right now is at 3, I think. Yeah, core's at 4. So, I mean, we're pretty much there. We're
I
close.
think that's healthy, man. Just let it come down on its own.
Yeah,
leave it alone.
The fear, what I see, like Jerome Powell, they're just afraid that back what happened like in the 80s, right? When I think that was the 80s when they had the double dip inflation, like inflation was pretty wild. They got a hold of it, then everything was good. Then before you know it, went up again. I don't know if it's the 80s or but before that, but yeah. So I'm sure he doesn't want to prevent. He's trying to prevent that a double,
right?
Dip inflation or whatever. So just to nip it in the bud, which But I mean, traveling is up. People are just going crazy. I mean, airlines are killing it right now.
Killing it, bro.
Retail, I think retail's about flat, but not down. Not too bad as far as the people spending money and just the retail as far as. So overall, economy is not looking bad right now. employment still, I mean, we're still pretty virtually low employment wise, 3.7, 3.8 or something. So yeah, just got to slowing the money down has still been it's been an issue, slowing the money. And I don't know where all these people getting this money from. Like, there's no
the equity in their homes.
Yeah,
the equity in their homes.
Right.
Yeah, we were talking off record, which might be a good thing to point out here. I've done more home equity lines of credit in the past month than I probably have the entire year.
Interesting.
What a home equity line of credit is? It's a way to access the equity in your home that you've built up over the years. And honestly, it hasn't been very many for some of these people. 2-3 years, they've built up quite a substantial amount of equity. You can access that without having to touch your first mortgage. You don't want to touch that because we're sitting at 3.25, maybe even under 3. There's no way you're doing a cash out refi to pull $20,000 to change your whole mortgage into a 7% interest rate. There's no way.
Large
and
payment,
if any loan officer is telling you to do that, run. Run, because that's terrible financial advice. Terrible.
Sure. Right.
So instead, what a lot of people are doing, if they want to access the equity, they are doing a home equity line of credit. They take what the new value of your home is, 80 to 85% of that. They'll allow you to pull minus what you currently owe. So if we're looking at $350,000 home, 80% of that is $280,000. Let's say you owe 200. That difference of 80,000, you're allowed to use at your disposal. You're allowed to start a line of credit, just like a credit card. You will have $80,000 available to you to spend when you want. Now, don't take this $80,000 in new debt to go buy more debt. It's not what you want to do.
Don't go buy that Ferrari or whatever, that Tesla, whatever.
No $10,000 Disneyland trip. You're staying in the Disneyland hotel in the suite with Mickey Mouse feeding you breakfast. You don't need to pay.
What's wrong with Mickey Mouse feeding you breakfast, bro? Like
that's fantastic.
Who doesn't want that?
Just don't go into debt for it. Just don't. If you want to save for 2 years to do it, Mickey will take care of you. But do not go into debt doing it.
Right.
So, but if you instead take that $80,000 in that example, you take that $80,000 and you renovate your house. You add an additional unit to your property. Let's say you got some land. You're not selling, right? You don't want to get rid of your rate and get a 7 on the market. You're keeping it. But how can I generate more income? Put an ADU on there, right? You put an additional dwelling, on the property that you're gonna 1 bedroom, 1 bath. See what that costs. Utilize the HELOC. Start paying it off with the rent that comes from it.
Right.
Or you're using that to pay off high interest debt. If taking $30,000 from there to pay off a vehicle is gonna cost $200. But your auto loan right now on that $30,000 is $700. That's a $500 net savings for the household. That helps battle this inflation.
Yep.
Take care of this on your own.
Yep.
Last thing, investment opportunities.
Yep.
If you take this $80,000 and you utilize it for investment opportunities, whether it's to pay down some of that debt and use the remainder to purchase your next property, turn yours into a rental, or sell it. I mean, if you want to use the funds to get the next house and then sell it, pay it all off.
Yeah. Yeah.
Sell it, pay it all off, and you'll be in the new house.
Or put a huge down payment to where your payment's going to be super low.
Absolutely.
There's so creative ways.
So many things you can do with a HELOC that can be financially
sound,
freeing.
Right.
Provide a peace of mind for you that's insane. It requires a lot of discipline.
But that's the beauty of home ownership, guys. So
absolutely.
Those that have never
ain't pulling no HELOC from a rental unit.
Right.
No,
so all those first-time
happening.
buyers or aspiring buyers out there, this is the time for you to really learn and understand and take advantage of this time. Even if you feel like you're not in a position, you think your credit's low, still reach out to a loan professional ASAP because you want to get started now just to see where you are. Because in that way, the only way to get better is to know where you are now. Then you can improve on that, and that loan officer will definitely put a plan together. Say, hey, you just do this, pay that off. Don't do that. 4 or 5 months from now, you can qualify for this. So that way you have something to work towards. And a lot of times people feel as if their credit's not good or they can't do it, and they get surprised like, oh, you actually qualify for 400, 500. You never know. So just doesn't hurt.
Qualifications on these are quick. They're nothing like a home application.
Right.
So you already own the home.
Yeah.
They're saying, hey, what you own is worth way more than what you owe on it. Mm-hmm. I mean, the only way you're going to get that in cash is if you sell it, However, this product allows you to access some of it right now.
Right.
You know what I mean? So
exactly.
It's a lot easier to qualify for. And I will say this, that most credit unions will have the best rates, right? I do not work at a credit union, right? I'm a mortgage broker. So if you go to a credit union, they might have a rate on a home equity line of credit in this market of maybe, 8-9%, which might seem high. But if you're using these funds to generate more than 8 or 9%, if you're using these funds to pay off interest, credit card and all that stuff is 25 plus.
Right.
Makes total sense. You're swapping out 26% for 9%.
Right.
So it makes total sense. So 8 or 9 might seem high, whereas a broker doing a HELOC like myself, you might be looking at 11, 12, right? So you can save yourself a % or two. You go to a local credit union. However, when you say, hey man, I want to do this HELOC, but then I want to sit down and talk about what's the best move. What do I do? How do I manage this to put myself in a better financial position? That shit ain't happening at no bank. You're not sitting down with nobody.
Right.
You're getting no investment strategy. So can you get it cheaper at certain places? Absolutely.
Go for it.
But it does not come with the strategy behind it. It doesn't
Right.
come with.
The
And I'll
full
tell you,
service.
and the reason I say this is because I have always been one to not push HELOCs myself.
Got it.
But what I've started to see is that people are coming to me wanting to do cash out refinances in this high rate environment to pay off HELOCs that they've already had. And I said, what happened? Why do we have an absolute need to do this right now? Your first mortgage is a 3. Well, we spent the HELOC on this, that, and the other, and it just got out of hand.
Oh
man. Who told? I mean, you got it through the bank. Did they tell you that? No,
They're not giving
they
financial
just
advice.
They just gave us the money and said go wild.
Yeah.
They don't care. They're making and now they're about to get paid off.
Right.
Through a refinance. They don't care.
Yeah.
You're not getting that. You're not getting that financial advice. So to me, that's how I tell people as a broker, I will not beat a credit union's rate. I'm saying it right now. I will not beat a credit union's rate. Will not.
Yeah.
My own home equity line of credit is through my credit union.
I got it. Yeah.
But I know what I'm doing.
Sure.
So if you do not take this money without getting that strategy. I mean, this weekend alone, I'm meeting one of my HELOC clients, and we are putting it on paper. What is our move to get into that home in Fowler that you want?
Yeah.
That bigger space for you and your family. How are we
And
going
that's
to
the
use
beauty
this?
of talking with a mortgage broker or someone
Absolutely.
like that. It's
Absolutely.
a financial strategist you're working with. They're going to give you all the information. They're going to offer they're going to listen to your situation, your unique situation, and come up with possibly a great plan or a great option that you can either use or not, but at least you'll have that information a lot more than you'll get basically at your credit union or your bank. They're not really there for that. So yeah, definitely. Like I said, you definitely want to have a great lending partner or loan officer that you can consult with just to, bounce things around, reach out to them, tell them what your other bank is offering, see if it's something that makes sense for them or not. And a good mortgage broker will be honest with you, be truthful, and they'll lead you in the right way, regardless if it benefits or not, but they're going to give you the best advice. So definitely good stuff, man. 100%.
Absolutely.
100%. Yes. Yeah. What else we got on the menu, man? Anything else on this you want to touch on? I know there was some how's what do you I know the market slowed down a little bit, right? How are you using this this extra time? I know we kind of touched on it last time.
Yeah.
I know you growth wise, trainings, just all the above, reading more books, getting better,
Right.
polishing up on our skills, all that.
The easiest way for me to sum that up is this is not the same market as it was a year ago. Mm-hmm. Well, no. A year ago is when it started, so that's not true. This is not the same market it was a year and a half ago.
Right.
A year and a half ago, this is not the same market that we're in today. So what I tell myself is that if it's not the same market, then how can I operate the same way and expect the same results? You can't. It's a completely different market,
Sure.
right? So you take this time, kind of like what you were asking, you take this time to think outside the box, pivot. How can I impact my business? And it may not even be to the bottom line. And I know a lot of people overlook those kind of actions, but it may not be to affecting your bottom line. It may not be to increasing the amount of commission you make this year. It may not be. But this is the perfect time to think outside the box, offer legit, factual strategy for your clients right now. Because now is not a time, this market is not the time to buy with emotion. This is the time to buy for strategy.
Sure.
There are so many opportunities right now, especially we were talking about new construction. So many opportunities right now. I've told one of my HELOC clients, You want to buy another house? Take out the HELOC. They got nothing to do to their property. Property's in good condition. They have no high interest debt to pay off. They just have a home, but they don't want to sell it to go get a different one. I said, take a HELOC out. Take 30 grand. Go buy a new construction home. Use their in-house lender. Don't even use me. Use their in-house lender. Take their 15, 20 grand that they're giving you. Buy your rate down to a 5% right now.
Yep.
Move into that house. Rent out your current one for the cost of what your mortgage is on there, plus the cost to borrow that 30 grand on the HELOC. Let the tenants pay that off, and now you have a new home at 5%.
Yeah.
When the rates drop to 5%, what you bought that new construction home for is going to be worth 50, 60, 70 grand more. If you really don't like it at that point, sell it, make your money, move it on to a different one. If you do like it, keep it.
Right.
That other house is paying for all the debts that you have other than what you have there. Now, people are saying the homes are overpriced, interest rates are high. Well, new construction starter homes, they're not that expensive.
Not nowadays. Yeah.
No, they are not. I mean, you can find some in good areas that are, 380, 390, 400, which may seem expensive because of the 7%. But if you use all their lender credit to buy it down to a 5, way more affordable.
Yes.
And you're using that with no money out of pocket because you're pulling it out of the house you bought 3 years ago.
And guys, very, very, very important.
Bulletproof right now,
100%.
Bulletproof.
100%. And all those who are considering new construction, please definitely reach out to a real estate agent prior.
Absolutely.
It's much better to have a real estate agent before you go to that new development the first time for a couple reasons. That agent that you're with, and it's no charge to you, it's completely free, but that person's completely 100% in your corner alone. So they're going to look out for everything. They're able to, answer more questions, give you more knowledge about the process, because there are agents there at the builders, right? You can go see them, but again, it's just so much better when you have someone that's fully in your best interest on your
destination, and you should be interviewing us. So
again, let me just go off. Valid point, bro. So a lot of people, be sure you're getting the right information from a professional in that subject area you're asking questions about. You know what I mean? Like, a lot of people just listen to their family members. We touched on this last podcast, but it's true. Like, don't listen to the dad, the mom, the uncle, the aunt. Unless they're in the business. If they're in the business, then you definitely want to listen to them. If they're not, they're just shooting off stuff, hearsay, fake news. Even the news, really throws people off because the news is typically reporting on old data.
Yeah.
They're going off of what is the Case-Shiller report, guys. Case-Shiller report. Their data, they've been around for many, many years. And a lot of news sources, a lot of these media sources, they use the Case-Shiller data statistics. However, Case-Shiller is like 3 months old data, right, guys? So that's not the most updated at all. So whenever you're hearing it, just know that that's where the way the market was about 3 months ago. So if you're hearing, so a lot of people are getting that late news, so they're thinking like, oh man, it's prices are down now. We're year on year down, even though that could have been maybe true in February or months ago. But today, no, we're actually up. So be careful what you listen to, who you listen to, and just educate. Get your own educate yourself for the right people. That's it. And then make the best decision from there. That's the only way. To have the true information is the only way you're going to make a great decision.
True, up-to-date, in the trenches information.
Exactly. The only way you can make a valid
and I'm not going to speak for everybody, but I do not mind the same clients calling me once a week. I do not. No. I don't mind if they call me every Friday. Hey, what's it looking like?
No.
What's it looking like?
Not
hey, what are the rates at?
We
hey,
love talking about it.
I have zero problem.
Call me all
with the same clients calling me.
No.
Because I have them. I have them already. They're investors who are looking to deploy cash. They're first-time home buyers who are nervous about stepping into the market. And they call me. They call me and they're like, hey, what do you think? What's the move?
Yeah.
I'll tell you.
Next time, tell them to watch the He Speakers market update.
I tell them all the time.
Watch the podcast. We just made it. We just did.
I just hang up and shoot the link. That's all I do.
This is it. We just did a video of that. Here you go, guys. This is
come on, man. We just dropped this yesterday, man. Then I hang up, shoot them the link, and then I send them the emoji like this. That's it, man. Just kidding. But don't mind it at all.
Yeah.
Don't mind it at all.
That's what we're.
You know what we ought to do? We ought to do a live sometime, man, where we can get live questions.
I know.
From people who are maybe watching and they have these questions on the spot. Maybe they don't want to talk on the phone in person, but they shoot them in the comment section 100%. Or whatever.
And the crazy thing is we've had that ability for a while.
Right, with that program.
We have not just used it. So remind me for sure. Next episode, guys, next podcast, we're going to be live on Facebook. We're going to try to figure out, I don't know how Instagram works, but I know we can do at least connect Facebook Live. So as we're doing this, guys, next podcast, we're going to be trying to stream it live as well. So please join in, ask questions, tune in, and we can ask you. We'll give you a shout out too.
Yeah.
All that.
Yeah, absolutely.
100%.
All right.
Sweet, man. Well,
fantastic update. Good luck out there. Stay educated and don't give up. Don't give up on your dreams of home ownership. It is not impossible. It's tough. It's tough in any market, so, don't listen to all those doom and gloom headlines. It's tough in any market. It's going to require work. And part of the work is reaching out and networking and building that team.
That's it.
And these are two members of your team right here. So
that's it. We got you covered every week, guys.
Yeah. All right. Till next week.
He Speakers, get you some merch.